You want to take a position in a stock, but you get stopped out and miss the big move, the real trade. This can be so frustrating. I get all your emails sent to my inbox. This happens to our developing traders at our firm here as well, and then we work on it. Okay, so let's work on this together in this video. In this video, a trader at our firm suffers a series of losses, but then she catches the big move. Watch how she takes these controlled, small losses to be in position to catch the big move, so you can too with your trading. If you want to learn how to grow your trading account using a vital trading technique, then stick around and watch this video. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. In this video, you're gonna learn how to take a series of small losses and then catch the big move. You're also gonna learn to use units of risk in your trading, how to determine your units of risk for each trade, to use measured moves to determine what you can expect from a trade, that there can be different trades within a big trade, that pro traders can be wrong before they're right, the importance of understanding your A-plus trades. And as always, we hope the biggest reward for videos that we're producing for you in the trading community is how to think through a trade like a pro. For those who want to see winning trades to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So this is a playbook from last Wednesday on the stock FCell. This is one of my A-plus setups. I just call it the first red day. It's not exactly the most accurate name. Just go with it. Big picture wise, SPY is not really relevant because it's a small cap. It was a holiday trading day, so the market was closing at 1 p.m. Intraday fundamentals, float is 27 mil, short flow is pretty low. RVOL, because these aren't large caps, I usually don't look at RVOL or ATR. Instead, I look at the amount of volume it traded and the range. So the day before, it had traded like 100 mil plus. And range-wise, based on the chart, which you guys will see here, the day before, I just thought like the measured move for the range per se is kind of like 15 to 20 cents, and that just gives me an idea of how much I can expect out of the trade. So technical analysis, this is the end of day chart. This is the 1 minute on the right. Like I said, it closed at 1, so you see the volume dropping off here. This was just after hour trading. And here's the daily on the left. And that's the 5 minute from end of day.
Can you go back to the daily? Okay. So this has a really, really bad history of gapping and failing on days like this.
I feel like for these, I really don't pay too much attention to this just because there isn't any volume. So I almost look at it as a fresh chart just because you can tell from the volume that it was just non-existent. And for these small cap stocks, a lot of the times you see a lot of charts like this where it just kind of just trends down, but there was just never any volume in it, so it's like nobody really paid attention to it until now it's in play, and we know, like, generally speaking, a lot of small cap, they'll probably most likely fade back lower after they have like some sort of parabolic run. So I guess my point is I look at these more from a technical standpoint.
Okay.
I know there are a lot of edge in the fundamental analysis as far as looking at like dilutions and how much like financing they have in it, et cetera, et cetera. But I've just kind of like not dig into the fundamentals as much.
Okay. Was there a fundamental reason why this was in play today, or technical?
I think there was some kind of PR, but to be honest, I don't remember.
Sounds right.
So I'll talk about my trade in the sense of, I guess, how I approach it. So when I see something like this, and second day in the morning, when I see it like closing, near the highs, doing the amount of volume it has done, gapping up the second day around open. By then, I'm looking, because for me, that's in the whole context of things, is lining up to be an A+ setup, in the sense that I think this can fade back into the 2-day or the 3-day VWAP at some point. It may not happen on this Wednesday. If this had held up that Wednesday, I would have looked at it as on Friday as my top pick as well. So it's like, my point is, it's like underlying it all, there's this big idea of like, hey, this is an A+ trade setting up for me, and for that I'm going to allot 5 units of risk for the big idea. Now, as far as individual trades, I usually break it down into being very specific about places I size up on, because sure, I think this can fade back into, the 2-day VWAP, which, like at 10 a.m. it was in like 60 cents, which is still 30 cents away. So you can't just size up like tier 5 every time it breaks down, because if you're wrong like once, then you're kind of like out of ammo. So this was just like a zoomed in chart of what it looked like at 10:15 a.m. and I'll talk about what I did up to that point. So what happened was, in the morning it had flushed down. Let's see. Sorry, I just like think this one chart's better. So in the morning pre-market, it had gapped up. It had already like ran up from the 70 cents area in the pre-market up to 90, which again, just keeping like the range in mind, I'm like, okay, it's kind of like made a good move already. It had flushed down here on pretty good volume, but I didn't want to chase it. So I was staying patient on this bounce back up here, as far as like waiting to see what the tape do. Is it going to fail, or is it going to just squeeze through, which in this case it squeezed through. It got up to 1, which again, it's made like a really decent move. Around 1, you just see, it just couldn't break through. So I think after it spent a few minutes up there, I had entered tier 1 around here, just risking to the $1 mark. Once this 95-ish area on a tape that was supporting, once that broke through, I added up to tier 2, which again, it was, the ad was just a Momo trade. In other words, if it started reclaiming 95 cents, I would get out, but still stay in my core here. But this had started working, so I added here again on the Momo break and quickly covered into the flush, just for like a really quick momentum trade here. And then once it bounced here and failed, I really sized in here back to tier 2 again, as part of like the bigger picture, like, hey, I think this can go to 60 cents sort of trade. But by then I had lowered my risk for all of my size to this 90-cent area, so I got stopped out right here. This was just to show like the big idea context. I'm allotting 5 tier risk to it. At this point, I think I made 1 tier on it. So for my next trade, I knew I had like 6 units of risk to work with from there. So after this happened, my next trade was around here, which is when it kind of bounced in and it had like a really deep pullback with pretty decent volume coming in. So I had entered tier 2, risking to here, got out a little bit just because I didn't like the fact that the tape was holding up really well. It quickly like got sold off back into the lows again, so I added back into the lows, and then it like did like this slow grind up sort of thing, and I just hit out on all of them, and that was just kind of based on the tape and the volume that came in. I did get stop out before I hit my risk, but just because I always like work with multiple lots and like some are momentum, some are like bigger, looser risks. And in this case, I just didn't like what I saw on the tape, so I just quickly got out and I lost 2 tiers in this. And then next up was literally like the minute it was like right here, the minute I hit out, it like actually stuffed back into like below VWAP, so I like quickly added back in. I like did a lot in the span of like 10 minutes. So I'm trying to figure out what exactly happened, but it quickly stopped, and then like I really sized back in again. At that point, I was already down a little bit in the trade, or in the stock on the day. But I thought that was like the quote unquote like turn candle or the stuff or however you call it, or change of character, change of trend. So I had sized in here, and by that point, because bigger context wise, it was my A+ setup, I decided to stay patient and felt like, you know, this was multiple times it's kind of rejecting. So the plan was that I was gonna be patient and let it work, and I had my stop set right here. And then I was wrong, so I got stopped out, and by then I was like almost down to my last unit of risk that I was willing to risk to this trade idea.
Can you pause for a second, because you're talking about these trades in units of risk, which is like a really good way to think about them, but I think that we don't talk about that a lot in our intern circle on how to categorize our trades by units of risk. Can you elaborate on your thinking with that?
There's like different setups that I have categorized, or Playbook, which you guys will slowly build up. And over time, I think you find out which ones are your best setups, which ones are, you know, not as tradable. So I think of them like my A+ setups are 5 units of risk, and
I mean, what's a unit of risk?
well, it's based on my daily stop, so it's 10%. 1 unit is 10%. So my best setups, if I haven't done anything on the day yet, I will, like right off the open, if I see something that's like A+ setting up and it's like everything's lined up, I will put half my daily stop on it. Now that's also not a static thing, because over time, as you sort of like make little trades within a trade idea, if I'm up, I would put more risk unit to that trade idea, if that makes sense.
Yeah, because you have more like ammo to work with, as you put it.
Yeah,
before.
exactly. It's like the trade's working, and there's again a bigger like trade idea underlying it that's like across multiple time frame. You want to make sure you really capitalize on it. And this is something I really had to work on too, because before I had you know, the amount of experience I have now, when I first started trading, I just remember I saw setups as like a trade, and I would allot risk to a trade. So for instance, I would look at, you know, say this stuff that won and it's gonna fail. This trade itself is, okay, I'm gonna size like tier 3 in this. I would probably be right, but then I would size tier 3 in this bounce and fail. Okay, be wrong. Size into tier 3 here, be wrong. Size into tier 3 here. And then before you know it, you're like, wait a minute, the trade itself at the end of the day would have worked, but it's like you didn't really manage your risk correctly. So that was something I really struggled with, and that's something I've had to learn, where for setups like this, where it's across multiple days, so there's a bigger context behind it, there's like a bigger story behind it, then I make sure I'm like, you know, aware of the overall risk that I'm putting to it. Does that answer your question?
Yeah, it does.
Okay, so this was the afternoon trade that I had put on that finally worked. So the last one you guys saw was when I really sized in here and then got stopped out again here, and that was actually, I know a lot of people were trapped here, and you can tell by the volume. And I saw that, and at the time I was just kind of like, you know what, like I don't want to touch it for now. It's obviously not breaking down. I'm just kind of chasing into these little pullbacks, and it's not breaking down. So I did well as far as like staying away and being patient, but also watching it and not like being frustrated and giving up on it. It was around here that it caught my attention again, because this had the short trap with all this volume coming in, And after that, it couldn't really hold up, and not only that, it soon pulled back to the level it came from relatively quickly. So to me, that's another reject, that's another sign of like, oh, actually, there really isn't a lot of underlying demand for it. It's like, yeah, people were trapped, but there aren't actual like buyers who want this, who is willing to support it higher and actually want the stock. So I had gotten back in, I started kind of just shorting a little bit here after this little fail from this 95 area. And that was kind of a core with a wider stop, because by then I only had like one tier of risk to work with. So I knew, I couldn't really put too much size on, and I had to be patient. So I decided to be a little looser just to make sure I'm watching it and have something in from good prices. So I entered here and I kind of watched it through all this chop here, and around here when it started hugging the lows and you see the tape really just finally weakening, which is it's a change of character from the way it was behaving around here in the dips, because here, I mean, I don't know, I mean, some of you guys have enough experience for this, where sometimes when a trade is working, it's like, it's so easy. It's just like, yeah, that level dropped out, like it was supposed to, it finally does. And I remember that day, like every time I started sizing in on the shorts, I would look at the tape, it's like, hit the bids, like come on, like like let's get through this, like let's sell some more. And you would just see the bids keep refreshing, or it would just sit there and say like a level you see that you want it to drop, but then nothing actually follows through, and you're like, oh wait a minute, this isn't going lower yet. But at this point it was a big change from how it was behaving in the morning on these dips. So that's when I added back into tier 2, but I had a pretty tight leash, so it was like sizing in, but it was really like a momentum trade, where had this even just spent like an extra minute at this price, I would have probably just hit out for scratch, just so I'm not putting unnecessarily risk on. But thankfully that kind of worked right away, and you could tell from the tape around here too, is that the level it broke down from, you see a lot of offers and size showing on the offer side, so that was good. And then I covered into the flushes here, and by then I had made back some of the losses, so I had more risk to work with. So yeah, I covered most of it here, because like by then the stock had kind of did a pretty decent move. It like just has been downtrending since this short trap there. And I knew I needed to give it some time, especially when the volume comes in on these pukes. That's like a really good place to cover on shorts usually. And then when this kind of spent some time here, it couldn't really move too far away from the lows of this price. And then you see the break of the tape and level around 80 cents. I added back again, and then that was really it. And then here was kind of my final covers, where I just laddered out into it. So this was a good trade, as far as making sure I wasn't being crazy with the risk right away, and making sure I stayed with the trade as it works, and putting risk on at really good places and times. So that was that. Any of you guys traded it? You did? How'd you do?
I did well, but I just kind of held it for, like, I didn't break it into individual trades.
Yeah.
Like, I did the first pop to 93 and then the other one to 95. But I had probably a wider stop than was kind of rational. It just happened to work out.
Yeah. No, there's definitely different ways of trading it.
Mm-hmm.
Yeah. I think, me personally, I break it into like smaller time frames than some of the other people who trade these stocks, because I mean, quite honestly, it's probably less stressful that way. I mean, you short into like a good level, have a looser stop, or levels that you work with, and just cover instead of like getting chopped into minute bars. But we all have our own styles. So reading the tape, I kind of went over it. Trade management, I went over it. Trade review, I think this was a good lesson for myself personally, as far as what Houston was talking about, as far as allotting risk units and whatnot. That's something I had to work on, like I said, and that was part of my monthly goal. So that's that. And then also I wanted to bring up this example of the importance of staying patient within the day when it's an A+ setup, setting up in a bigger context. And roommate Monopoly example was, so I was playing Monopoly with my roommate, and she's never played Monopoly before, so she doesn't know that the game lasts for hours and hours and
So you
hours.
crushed her.
I did, but that's not the point. But point was, and I was being friendly. I just wanted to show her the game and whatnot. It's actually Cat-topoly, which is Monopoly with cats. Not the point. Anyways, so she had started the game and she didn't know how it works. And with like our first 2 rounds of rolling the dice, you know, me and her boyfriend who was playing with us had gone, I don't know, like halfway across the board, and she got like the penalty, and then she got like another like catastrophe card or like the bad card or whatever, and you just see her face kind of, it's a cat Monopoly game, I mean, come on. So you just see her face kind of going like, oh, like, I thought we were playing a game, it's supposed to be fun, like this is not fun at all. And I just sat there and I looked at her and I'm like, hey, remember, this, I know you haven't played the game before, but this actually lasts for hours, and that's not even an exaggeration. We're literally 5 minutes into the game, so this really does not mean much at all whatsoever. Like, you can be patient, like so much can change. There's so much more to the game that you don't even know. And really, just because you got off to a bad start in this game, because it's such a long game, it doesn't even matter. And I bring that example up because I feel like it's a good metaphor for trading individual setups. It's a good metaphor for just our trading careers in general, life in general, in that I used to just always be, I get very impatient at times, especially when I see like some stuff that has been running up for multiple days and I love shorting, and I'm like, it's gonna turn now, like we're gonna go all in and it's gonna work and we're just gonna sit here and like watch it fall. And when that doesn't happen, I would just get so frustrated. There has been multiple occasions in the past where I see something like this, it traps me twice, and I'm like, all right, you know what, screw this, it's not turning today. That happened actually on Tilray, where when the day it cracked from, you know, like 240 or whatever, and ended the day at like 120, I was not short. I was short every day before that. And so I just wanted to bring that example up as far as like, you know, if you have the right risk management, then you still have enough ammo to use even you're wrong in the trade idea a few times. And if you're smart about like the places you actually size in, then you can absolutely get it back. So anyways, that is that. Any questions? Yes.
That was really good. And I agree that trading and Catopoly have a lot in common. But I did want to say that if you could go back to your executions slide, the first one, like in the early part of the day, you did a really good job with managing your risk and holding yourself accountable to where you were going to stop out. Because I think that a lot of people, like you came in with this A+ setup idea, and I think a lot of times we come into the office and we're like, oh, this F cell is up way too much on non-substantial news. This thing should go back to 50 cents or 40 cents by the end of the day. But that doesn't mean that you have license to just hammer it in short at 9:30. So there was the small opening drive, which you didn't chase. And then even when the trade wasn't working out exactly as you planned, when you were shorting into those pullbacks, you just stopped out for a small loss. Like, who cares about, okay, if it gets over 90 cents, I'll hit out, reevaluate. If it gets over 95 cents, I'll hit out, reevaluate. But there are a lot of people who can get, you know, cut up in these stocks that don't end up breaking down, and they're just relentlessly shorting those pullbacks. So I just wanted to say good job in that.
Yeah, I learned it the hard way, so I learned not to. It just hurts too much. Anyone else? Questions? Yes.
So can you go to like the not long term, but like at the end of the day?
This one?
Yeah, that's fine.
Okay.
So like, obviously like it's important to be patient, but like one thing I've noticed with my trading at least is like I'll get in at the right spot, and then I'll just hold it.
Yeah.
And then it'll randomly it'll go down, and then like you shouldn't short against like a declining VWAP or whatever, or you shouldn't be long against a declining VWAP. So I'm like, okay, I'll just hold it until the end of the day, and then it just randomly like goes up to VWAP. So what was your like logic for covering like close to the bottom and not holding it until like end of the day?
There's a lot more moving pieces than just shorting until end of the day or not buying below VWAP and whatnot. So in this case, there's, it comes from, okay, this is an A+ setup, and I think it can pull back to the VWAP. So that's one. And two is the range and the measured move that helps me determine how much I'm looking for out of the trade. In the morning, my sort of idea was like 15 to 20 cents, which, as you can tell, in the morning, this obviously moved like 25 cents. But after here, every time it moved like 15, 20 cents, I would cover a little bit, reevaluate, let it give me a lower risk level than say up here before I enter again, and then cover it again, and then so that's that. And also, I think it comes from knowing your setups, which I think takes time. So for this specific setup, it had the previous 2-day run up, gap up, squeeze, and then fail. So my goal was like say the 60-cent area, whereas some other setups that has these low small caps that just it's like the first day it just gaps up in the morning pre-market. It doesn't really have any previous day history, and they have really bad fundamentals. The float is like decent. It's not like 3 mil or anything. It's trading, say the float's 20 mil, it's traded like 30 mil volume on a day, and then it like sets up like this head and shoulder, and then it breaks the level. Like that's a great trade to hold until end of the day. So I think it's also part of like knowing your setups. And even here, as far as not buying below a declining VWAP, like I actually bought some on the bounce. Like I only got in like 2,000 shares, I think, which wasn't a whole lot, but it's like when certain moves are super extended, that rules work within certain setups. So just a general rule, or just like a really strict rule of not buying below VWAP, I don't know if that's specific enough, just because there's so many setups. So I think my point is to really know what kind of setup and playbook that you're working within.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at S&B, train and trade well.